In this session we shall be looking at how we value inventory using the last in, first out or Lifo method. Well, Lifo is one of the three main methods of valuing inventory, the others being AVCO and FIFO. With Lifo, however, we assume that we use the most recent inventory first, and then work our way back using up older inventory as we go along. As a consequence of this, when we value our inventory at the end of a period, the values will tend to reflect the older costs of stock rather than newer costs. One thing to note, however, is that Lifo cannot be used when we value inventory for year-end accounts. It's actually banned from that use by both accounting standards and HM Revenue and Customs. Now on the screen at present we have an example of a stock card. This is a document that's used to record receipts, issues and balances of lines of stock at any given time. On the left of the table we record the date of transactions of purchases and sales or issues of stock. Then we have three columns where we record receipts. So we'll record the quantity of stock that's been received, whether that's in kilograms, litres, metres, square centimetres, whatever. Next to that we have a column where we record the cost per unit, so that might be cost per kilogram, cost per litre, etc. And finally we have a column where we record the total cost. This is simply going to be the quantity multiplied by the cost per unit. To the right of our receipts we have three columns where we're going to record issues or sales of stock. So again we will record the quantity of stock that's been issued, the cost per unit and the total cost again. To the right of our table we record the balance. Now we can use three columns for this, quantity, cost per unit and total cost, but here I'm just presenting a two-column format where we record the quantity that's still held in stock and the total cost of that quantity of stock. So let's have a look at how to complete a stock card using the Lifo method. So we start with a business holding inventory of product X of 20 units which cost it £42, and that's at the 1st of February 2013. So we're going to record that information into our stock card. We record the date that the stock was brought forward. Now, as this is stock being brought forward, we don't need to enter anything into receipts or the issues columns. We just need to record the balance to the right of the table. So we record the 20 units held and the total cost associated with those 20 units. On the following day, the business then buys 100 units of product X, this time at a cost of £2 per unit. Well, we're going to be recording that information in the receipts columns and then updating the balance figures to show what balance of stock is held. So we'll record the date of the transaction, 2nd of February. We then record the quantity received in the quantity column, the cost per unit of £2 per unit, and we calculate the total cost of that purchase. So that's 100 multiplied by £2 per unit gives us £200. There's nothing going to go in the issues columns as this is a purchase of stock. So we'll then complete the balance columns. Well, we had 20 units before this transaction, we bought 100, so obviously we've got 120 units in stock. Likewise with the cost, we had stock costing us £42 before this transaction. We purchased a further £200 of stock, so we're going to have £242 worth of stock in total. Following this transaction, we then buy another 120 units of product X. This time, however, it's at a cost of £2.20 per unit. Well, we follow the exact same process that we followed with the previous transaction. We record the date, 15th of February, and then the quantity and cost per unit in the receipts columns. We can then calculate the total cost, this simply being the quantity of 120 units multiplied by the cost per unit of £2.20. Again, nothing is to go into the issues columns, and we update our balance figures. So now we have 240 units in stock, and there's an associated cost of £506. Our next transaction occurs on the 20th of February, and here the business issues 140 units of product X. Well, we're going to complete the issues section of the stock card together with the balance section of the stock card. But first of all, what we have to do is we've got to determine which 140 units we will be getting rid of or issuing. Under Lifo, we assume that we use the most recent stock first and then move to the next most recent stock, then to the next, and so on. So we'll have a look at our stock card. Here we can see that we purchased 120 units on the 15th of February. So we're going to use the 120 units first of all. But we also require a further 20 units to complete this 140 units that are being issued. So we'll use 20 units from the units that were purchased on the 2nd of February. So we can now, having worked out which stock we're issuing, we can now calculate the associated cost. So we get rid of the 120 units bought on the 15th of February. Well, those units cost us £264. We'll also get rid of 20 units of the 100 units we purchased on the 2nd of February. Well, those cost us £2 each, so the total cost of those 20 units will be £40. In total, therefore, the 140 units will have cost us £304. Let's now complete this stock card for this transaction. So we record the date of the transaction, we record the 140 units that are being issued, we also enter the total cost of £304, and now we can calculate the cost per unit of those 140 units. That's just the £304 divided by the 140 units that are associated with it. Finally, we complete the balance columns. Well, we had 240 units before these units were issued, so we now have 100 units. We had a cost of £506 before this transaction. We've used up £304 of that, so we're left with £202 left in stock. Following our issue of 140 units, the business then buys an additional 80 units of product X, this time at a cost of £2.50 per unit. Well, this is nice and straightforward. We simply follow the method outlined with our previous purchases. We record the date, we record the quantity and cost per unit, and then calculate the total cost of that purchase, and update the balance figures. So, for example, we have 100 units before this transaction, we've purchased 80 units, so obviously we've got 180 units in inventory. Likewise, we had costs associated with our stock before this transaction of £202. We've purchased an additional £200 of inventory, so we've now got inventory with a total cost of £402. Lastly, The business then issues a further 110 units of product X. So again, the first thing we've got to do is establish which stock or inventory is being issued. Well, with Lifo, we issue the most recent stock first and then work our way backwards. So we purchased 80 units on the 24th of February, so we will use that first of all. We then go back to our next purchase of stock, that on the 15th of February, but if you remember, we've already used all of that up, so there's none of that left. So we would then have to go back to the purchase of inventory on the 2nd of February. Well, there we had 100 units bought, but we've already used up 20. So that would leave us with 80 units from that purchase. But we only need 30 units, so all of our remaining 30 units will come from this purchase there. Now that we've established where the issues of inventory will come from, we can calculate the associated total cost. So we've got the 80 units bought on the 24th. Well, that costs £200, and we're going to use all of that. We'll also use 30 of the units bought on the 2nd of February. That costs £2 per unit, so we've got a total cost from that purchase of £60. So in total, the 110 units will have cost us £260. And now that we've calculated that, we can complete the stock card. So we record the date, the 26th of February. We record the quantity issued of 110 and the associated total cost of £260. From that we can calculate the cost per unit. This is going to be £260 divided by 110 units. Lastly, we can complete the balances columns. So we had 180 units, we've issued 110, that leaves us with 70 units. The 180 units we had before this transaction had an associated total cost of £402. We're issuing inventory with a total cost of £260, and that leaves us with a total cost associated with our 70 units of £142. Lastly, let's have a look at the inventory that is held at the period end. We know that we've got 70 units left, but how is that costed? Well, we have 20 units that has come to us from the units that were brought forward at the start of the month. That had a cost of £42 attached to it. We also have 50 units left from the units that we bought on the 2nd of February. Each of those had a cost of £2, so an overall cost of £100. So of our 70 units that are left, there is an overall cost associated with that of £142. What you'll notice with the Lifo is that it can start becoming quite awkward to establish which units are left at any given time, and you do have to keep a close eye on this, otherwise you can very quickly end up with a situation where you're not sure which costs are still left in inventory.